So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot this week has been tremendously profitable for us as we have been able to capitalize on buying opportunities around this area. And since price broke out of the $2024 area, we have been buying this asset. Now, for the sake of clarity, for those of you who are joining us for the first time, let me quickly share with you what we saw at the beginning of the week right here on the 1 hour time frame that made us consider buying this asset. Now, the first thing we saw on the 1 hour time frame was the breakout of this descending trend line, which we identified on the higher time frame. So we had this descending trend line marked out. In fact, this descending trend line has been supporting the bearish momentum since the beginning of the year. Remember, we talked about how the new year started with a series of profit-taking activities leading into price action, finding lower lows and lower highs. And you know how we do it in this community. When price breaks out of our trend lines, it's a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And of course, we saw retest of structure, giving us beautiful opportunities to continue the uptrend scenario. Now let's go back into the 1 hour time frame. Now, in addition to the 1 hour time frame, let me zoom in so we can see things clearly. In addition to the 1 hour time frame, we saw how price action was confined within a range during the first 8 to 10 hours of the week. Price confined within the $2028.50 level and the $2019.20 area. And of course, you know how we do it whenever we have a range like this. We exercise patience and wait for either the breakdown of the range to happen, giving us selling opportunities, or the breakout of the resistance line to happen and give us buying opportunities. And prior to our live session yesterday, I did mention that I had the buy position triggered. And of course, I also opened our mind to the idea that price action may come back and retest this descending trend line that was broken in an attempt to continue the uptrend move. To help us manage a retest of that structure, remember that we identified this $2024 level, which we duly marked out, and we said buy pressure around this area will be all we need to join that uptrend continuation. And look at what happened here. About 3 to 4 hours into the New York session, we saw price drop significantly into the structure, and for about 3 hours, we saw buy pressure resume around that area, giving us the opportunity to join our first buy position for the week. And we kept on adding more position. Remember, we marked out this level here yesterday, the $2028.50 level. And of course, we added this $2035 area, all of which we said if price action ever breaks out of the structure, we will be adding more buy positions to our existing trade. So this was how we manage our buy position from yesterday. So currently we have a minimum of 1, 2, 3 buy positions running in profit at this point. And for those of you who capitalized on this opportunity, well done and kudos to you for being on standby to capitalize on that move. And as it is right now, you want to be moving your stop losses accordingly. Securing your position makes quite a lot of sense at this point. And I will be suggesting that anywhere below the 2035 area seems most appropriate to move all stop losses to, while we also give enough breathing space for price action to move around. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? Well, my answer still falls within the 1 hour time frame right here. The first thing we can see here is this beautiful ascending trend line. You see, this trend line here has been supporting the bullish momentum since last week Friday, and at no point in time did we see a breakdown retest of the structure to further emphasize the strength of the buyers in this market. And you will be asking, why is price of the gold soaring at this point in time? Well, the escalating conflict in the Middle East, which have heightened the risk of a broader regional crisis, is dampening recent market optimism, and this coupled with the ongoing decline in the US Treasury bond yield has significantly boosted out the price of gold in the last 24 hours. On the other side, the US dollar is struggling to make significant gains as market participants seek clarity on the Federal Reserve's potential rate cuts. This dynamics further supports the price of gold at this moment, though a substantial upward movement appears unlikely ahead of the pivotal FOMC policy meeting, which started today, and may lead to a subdued range-bound price action activities today. So let's put this in mind that we might likely see some choppy situation today, and in light of this condition, it is prudent to safeguard existing buy positions. However, considering the fact that price still remains above this ascending trend line, we're still going to maintain our bullish bias. We may see a situation where price could go range bound ahead of tomorrow's FOMC decision, maybe within the 2040 and this ascending trend line before a final breakout or breakdown of that range, giving us an opportunity to trade. However, we see here that since price tested the 2040, that is the highest point price action has been for this week, we have noticed selling pressure in the last 4 to 5 hours now. Now, if the selling pressure persists here, it doesn't necessarily mean that the bullish outlook is finally negated, because we still have trend lines here. We have the ascending trend line, which could still serve as a bus stop to incite more bullish opportunity. In fact, even if price breaks down this ascending trend line, we still have a bus stop at the retest of the descending trend line that was broken yesterday to incite another wave of bullish momentum. However, if you are a counter trend trader and wish to capitalize on this counter trend opportunity, that is, if price breaks down this ascending trend line, you can be looking at a minimum of 100 pips to catch here. So counter trend traders break down retest of this ascending trend line may be a good opportunity to join. But for me, I will wait and see how the market will react to this trend line, where I will be looking out for potential reversal patterns like double bottom structures to join an uptrend continuation. But if price breaks down that trend line, then this could incite a strong bearish move to the downside. So on the XAUUSD, I still hold on to a bullish bias. So I have a buy stop order above the 2040 to capitalize on the uptrend continuation. So let's see how the market will play out in the next couple of hours as we look forward to the mid-tier economic features from the United States, which will reflect the housing price index, the JOLTS job opening, and of course the consumer confidence. So this is my simple view on the XAUUSD. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section